All right, let's officially now bring in David Zervos, Chief Market Strategist at Jefferies, as well as a CNBC contributor, also on the not-so-short list of 11 candidates who may replace Jay Powell. Welcome, David.
That was a long introduction, Melissa.
It was. I mean, there's so many mantles which you carry these days. But
and a frequent guest here, which is how we know him. We don't really care about the other stuff.
What did you make of the number today?
I don't make a lot of it.
Okay.
Steve said it's a very volatile number. There's some really quirky stuff on the services side. I think 80% of this gain was in services. There was the good side was relatively tame. Also, if you look back at core PPI, the year-over-year figure, we were cutting rates when this number was even higher in Q4 of last year. So the September, October, November, December prints for that core PPI were higher than this 3.7 number that came out. So to be honest with you, and Jay was perfectly comfortable cutting rates then. He's not very comfortable with it now. I think a lot of this stuff is noisy. It doesn't make its way through to core PCE, doesn't make its way to core CPI, and we'll see that in the numbers ahead. And there's been a lot of very good news on inflation, at least to start the year, and certainly over the last couple years as we've come from those incredibly high levels.
So the narrative today that this number may give the Fed a reason to pause or to rethink cutting rates, any of that, along with CPI and the fact that services side of CPI was greater than what had been anticipated and goods remained fairly tame. None of this changes your view about what the Fed should do.
Well, you cast that in a very unusual way for me. I have been over many years here at this table and other tables on the network, been very careful not to talk about what the Fed should do, because I've never really felt like what I thought the Fed should do mattered. I just tell you what I think the Fed will do. Now that's a little different, Melissa. So I think I'm sitting in a position with a very esteemed group of people, and I'm very honored to be there, where maybe what I think the Fed should do does matter. And we've had on this show, I think for the last 6 or 8 Fed meetings, Kelly has asked about, what you think, what you would do if you were there. We had a shadow committee. I think in the last 3 meetings I have said I would say 50 basis points. I was one of the few. I think there might be one other in that shadow committee that they're putting up there. And I'm still there. I'm still absolutely there. I think there is a reasonable storyline, a very cogent storyline that suggests monetary policy is restrictive. It's gotten more restrictive. The arguments I put forward have been related more to the balance sheet and that contraction. But generally speaking, I don't see any reason why this number changes that view.
So a 50 cut in September. After that, though, would you be data dependent and open to the idea that tariffs may then translate into inflation later on in a few months down, which a lot of economists out there, like Jan Hatzius of Goldman Sachs, for one, which President Trump took issue with, but made the point that it could be the consumer that will be then handling the burden of tariffs down the road.
Look, watch the evidence. I think I would be watching all the evidence, all the data carefully, recognizing that high-frequency data is extremely volatile and does not portend longer-term trends. But I think there's a very cogent case to be made that we are way above neutral in rates, and that getting rates back toward neutral would bring in many, many jobs. We have a 4.2% unemployment rate right now. We had, in 2019, a 3.5% unemployment rate with very little inflation. There's no reason why we couldn't be going back there, or I think with some of the supply side reforms going even lower than 3.5. So we've got a million jobs, maybe more, on the table that could be brought in if we don't get too obsessed with this last little bit of the inflation battle. And I think it is the last little bit of the inflation battle.